Very good morning and welcome to Core Finance. And today's CEO interview is with Dr. Robert Trice, who has very kindly agreed to come back again to talk about what's going on at Hurricane Energy. Morning, Bob, and how are you today?
Very relaxed, thank you.
I'm very pleased to hear it. It's been a busy morning. We've had SW trains, the Southwest trains have only just managed to get us here, but why don't you start off by telling us what's been going on? It's been a really busy time, obviously in over 2 years, but in the last few months, sort of 12 months, where have you come from? Where are you now?
Well, the last 12 months we've been completing that 4-well drilling campaign, 2 wells on Lancaster, one to evaluate the deep oil and the other one to act as our second producer, second horizontal well. So they were a success. And then we followed on with a Lincoln discovery well and a Halifax discovery well. Pretty much after completing that 4-well campaign, it was out preparing for a fundraising, which we've just completed.
Excellent. Now, before we go into anything about the tricks of what's been going on in the last few months, I wanted to ask you whether now you feel that your basement concept is proven up, or where you are in that, because I'd like you to hear it from you.
Yeah, well, I think I'd be very arrogant and technically inept to say it's proven up. No, we need to demonstrate commercial flow. We need to produce this as a development, and that's really what the first phase of the Lancaster field development is. The EPS. That's the final piece in the jigsaw puzzle. Excellent.
So now Lancaster. Tell us about the timings on the run up to the EPS, how things are going to be going now, because as you said, it's only 18 months till production.
Yes, 18 months to first oil. Well, we're pleased to say we're on track. As we presented at the AGM, our timetable is to have oil by Q1, H1 19. So with this fundraising, the next step is to get board approval for final investment decision, and then we're off to the races, basically.
Good. I'm going to come back to news flow and what you've got to buy and what you've got to install and so on in a minute. Mm-hmm. I'd like a technical analysis of that, if I may. But let's get the fundraising thing sorted out first. I mean, I think this is still staying with Lancaster and the EPS. Yes. I would say that by raising 300 million of equity and 220 million of convertible plus a few, I would say that's an amazing happening given what's going on with the oil price at the moment. And I know that you did a huge amount of work on it before, but once announced, it was done in no time at all. Mm-hmm. And I know that you've got a whole bunch of high-quality, long-term investors in the company.
Absolutely.
So talk me through the fundraising.
Well, yes. So as you say, it was a hell of a lot of work pre-raise, masterminded by Alistair, our CFO. Brilliant job. And as I said at the AGM, I felt that fundraising. I was going into fundraising with a high degree of confidence because of the feedback we'd received. And of course, it was a little bit nervous, falling oil price, trying to raise half a $1 billion. But the interest was there, and as you rightly say, we got a fantastic list of new investors. So, yeah, no, it was a very good result indeed.
And it's fair to say that this raise is the biggest raise by anyone since the oil price fall. And to raise 500 million in whatever concept, but to have 300 million of equity in the space of a number of calls, must give you immense confidence in the marketplace who are prepared to come up with that sort of money.
Absolutely.
To a certain extent, I know that it means that you control your own destiny.
I think that's that really is it. The ability to fund the EPS 100% means that we are driving the project forward. We're not relying on any third party, and we can get after this all-important asset to our timeline and bring value to the shareholder earlier rather than later. So yeah, all on target for first oil.
Good. Now I know that means that particularly people who don't think that there's much news coming up. I think that we can just about knock that one. We can just knock that one on the head. Yeah. Why don't you, on a technical basis, because I think people would like to know, tell us what you've ordered, what you're paying for, what's being delivered. Tell us about the FPSO and the buoying system and so on, because I think it's quite important.
Well, it is very important. I mean, that's the way we're going to get the loot out of the ground. So basically, from a news flow point of view, FID will be the first thing that hits the news. Then we've got about 1,000 tons of steel arriving at the dock, which will be welded up to make a buoy. Of course, the vessel, the Akamuzu, will be moving to location shortly. And then we'll have some very good news. We anticipate very good news by the end of the year with a revised CPR, which will include first valuations of Lincoln and Halifax. So that will be effectively what we call the Greater Lancaster area and the Greater Warwick area. So that's something by end of year that we're looking forward to. Then moving into the following year, we will be completing, well, the trees, first of all, will come off the production line. Yeah. They've been on Christmas trees, most amusing. Went on the production line last December. They'll be coming off next February. And then out into the field, completing the wells, laying the surf, there's the subsea umbilicals, risers, and I've forgotten the other one. But anyway, flow lines, and then the buoy will come out after being trial fitted to the FPSO and basically attached to the surf, and then the vessel will return, or will arrive, should I say, at Lancaster late next year with the view of oil production by Q1 19. And really, one of the we've given ourselves something like a 6-month window to attach the vessel to the buoy, and all we need in that 6 months is 6 hours of 3-metre waves. And that's something, I know the Western Shetlands is a harsh environment, but that's something that's very achievable. So, yeah, so everything on track.
Hardly anything at all.
No, hardly any news whatsoever.
And this is sort of laying the subsurface risk argument to ground as well, really, isn't it?
Yeah, absolutely. I mean,
so much work.
The exciting thing, really, for us is not so much the returning some cash to the company. I mean, even at a $40 oil, we should be making a net profit of $100 million a year, and $50 that goes up to $150 million a year. So, of course, there's revenue generation, but really the purpose of the EPS is to provide technical information that allows us to go to the next phase of a field development. Yep. And, of course, it will de-risk our other assets, which are very close. Lincoln and Halifax are both proximal to Lancaster. So very important.
Good. Now, I know you're reluctant to talk about the farm-out procedure a bit because half of it is confidential and half of it is uncertain. But I come back to the point about being in charge of your own destiny, because you've always said that in the process of going up to, i.e. appraisal and the EPS, that is something which you're happy to be with 100%. You've funded it, and you're able to be in a position whereby you're going forward with that, whatever happens now. And you've just said that $40 to $50 oil, which might be uncomfortable for majors and things who are paying dividends and have got a lot of things on their plate, but it's not uncomfortable with you.
Not at all.
So, generating $100 or $150 million of free cash flow would, in due course, even if you were doing it on your own, would still pay for 3 or 4 wells a year to take the development to the next stage. So, I'm almost answering a question for you, but I am saying that I understand that the data room is still open. Indeed. And it's still got a large number of high quality people in it.
Correct.
What I'd like to know is how happy you are with the situation. You are talking to high quality people. You can do it on your own, but of course you are, to a certain extent, in due course, quite happy to bring a partner on.
Absolutely. I mean, nothing's changed. I mean, our strategy has always been to bring in a partner that is capable, both financially and technically, to undertake the full field development of Lancaster, the GLA, or the GWA. I mean, that's always been our objective. So what we're looking for in a partner is, number one, that ability. And number two, the ability to fund and execute early appraisal, so that we can move to the next step of value creation quickly rather than slower. And yeah, I mean that's always been the strategy. I mean, Hurricane is a concept prover, and as we currently funded and are currently set up, we're not designed in any way, shape, or form to go on to full field development.
No, and the full field development, if your concept is right and everything else, would dwarf what the EPS would be like in terms of amount of oil that you can produce and so on.
Indeed. I mean, we've got a number of assets very close. I mean, Lincoln is 9 kilometres away. Halifax is 30 kilometres up the ridge, or exactly next door to Lancaster. And of course, there's Whirlwind. There's plenty of meat there. And the key thing for us is to accelerate that value creation, because, as you're well aware, oil in the ground has zero value. I mean, our share price reflects that. We're valued for the reserve we have under the EPS.
Yeah.
So what we need to do is to bring those prospective or contingent resources as high up the de-risking chain as possible, and ideally get them into reserve status.
Good. Now, what I wanted to do was you've sort of started the next question for me in a way, because having talked about her at Lancaster and so on, I'd love for you to give us an idea of the other prospects within the portfolio, and you've mentioned one or two of them, so perhaps you could do a bit more detail on the
certainly
on the other ones.
Well, one of the advantages or disadvantages of being drilling 4 wells back to back is the flow of data, and we are now just about getting the final bits and pieces in from Lincoln. We're still getting key data in from Halifax. That's third-party reports as well as scientific analysis on core and other material. And yes, both Lincoln and Halifax data are, as we're looking at it, de-risking those prospects. And that data is being made available to interested parties in the data room, and of course will be shared and is being shared with RPS, as they will be doing a CPR by the end of the year.
And that CPR is going to be everything except Lancaster in the CPR.
Yes, because basically we've covered Lancaster. It's the other assets. Yeah.
And at that stage, I mean, it'll be another thing to update the market on.
Absolutely.
Because you presume it'll have a meaningful effect on what people consider the value of the rest of the business to be. You would have thought that at the moment most of the people are considering that that Lancaster is the bulk of it because it's been funded in the EPS and everything else. But
yeah, well, exactly. I mean, share price is reflected in the risking of taking it to Lancaster's reserves, and with the once we've got FID, then that risking goes. So I would anticipate, I have to be careful what I say, but it's logical to expect, particularly if you read Analyst's work, that there will be an uplift once we've got FID. That's the next risking gate towards turning the taps on. And of course, there will be other engineering de-risking as we go towards first oil. But with the other assets, again, there'll be contingent or prospective resources, and of course, the value of those, no matter how big they are, is not necessarily going to be reflected in the share price. No. However, the company's potential will be improved. No question. We don't drill these wells for grins. They're there to add value to the company and strengthen the asset base.
And because of the nature of the fracture basin concept, they're lookalikes.
They are absolute lookalikes, yes, and indeed their proximity to the EPS means that in the success case of the next phase of a full field development, it should contain potentially oil production from those other assets.
And as you say, divided into two, separated.
Yeah, so GLA, the Greater Lancaster area, which we consider to be the licence under Lancaster and Halifax, that's we believe one pressure communicated volume of oil, yet to be proved. I don't want to mislead people. Yeah. We need the pressure data to confirm that. But we do know that there's a pressure barrier between Lancaster and Lincoln and Warwick, which we call the Greater Warwick area. Yeah. And but regardless of the pressure boundary, we believe the oil type is likely to be the same as Lancaster. And its proximity means it would be a nonsense to do a field development of Lancaster in isolation. It would be sensible, practical, and the ideal way forward is to have a full field development to include those resources on the GWA, Greater Warwick area.
That sounds very exciting indeed.
Yeah, well,
yeah.
It is. I mean, the potential is significant, and
Yeah.
the EPS is simply the first step.
I think that's what investors really want to understand, is that's right. The EPS is literally the first stage. It'll take you to, what, 17,000 barrels a day to begin with, and it is the sort of way you're going to prove up the whole thing. Our time has whizzed by as usual, Robert, but I always like to let my guests have a couple of minutes at the end to sort of, you've established that how keen you are on the whole thing, but give us your vision, what you'd like to see. The next 2 years are going to be obviously crucial. How do you see it going?
Well, all price aside, and you asked me for my vision, what ideally would I like to see? Well, I'd like to see the EPS executed optimally, and by the time we have first oil, we've attracted a partner that's helping us drill appraisal wells, but very much is oil price dependent. So in the assumption that the oil price remains low, 40s, low 40s, then I think the optimum solution again there would be that we'll be sitting there on target, first oil 2019, generating good cash returns, and reviewing the strategy thereafter.
Excellent. And there's no truth in the rumour that when that happens, you're going to rename the Brent contract the Lancaster contract.
Very good.
I'd like to thank Dr. Robert Trice for being my guest on today's Core Finance CEO interview. Robert, it's been fantastic to see you again. Thank you very much for coming in.
Pleasure.
Very best of luck in the future.
Thank you.
Malcolm Grenwood, thank you very much indeed.